Hi, this is Lynn and welcome back. Today we're talking about SOFI Technologies, ticker symbol SOFI. Is it the time to buy right now, or will we expect the stock to drop a lot further? So let's dive into it and find out the details. This stock is very exciting to me because they have a bank charter, which is very unique for a stock of this type. So let's look at the details. We will look at their stock chart also and compare it to a similar very large stock which it's following with its stock chart moves very closely, so you'll be interested in that. But first, before we get into the details on SOFI, if you could give this video a thumbs up in return for my efforts bringing you details about this stock, it would be greatly appreciated. And while you're at it, subscribe for more videos like this one. And remember, this is not financial advice, but my opinion only. So let's go and look at today's hot stock. In looking at SOFI's one-year stock profile, we can see that they were at a high on January 1st, 2021 of $22.65, and then another high on November 5th, 2021 of $22 again, and sliding back to the present value of about $6. They have a market cap about $5 billion and an earnings date on May 10th. They also have a 52-week price range from $6 to $24 and a large average volume of stock shares traded per day of 57 million shares. That's quite a bit. Looks like there's some day traders making money on this stock. In looking at what SOFI does, they offer a checking and savings account because they have a bank charter, which is unique, as I said. They offer credit cards. They have SOFI Invest, and they're really well known for their student loan processing. That's a big reason that they're pulling back right now with a moratorium on student loans, which is unfortunate. And that's all related to COVID, of course. They also give personal loans as well as home loans, private student loans, and they have small business financing as well. Let's take a look at their market watch to see how the stock has been performing over the recent past. If you look at it, their one-year performance has showed a minus 62%, year-to-date is minus 60%, 3 months is minus 43%, and 1 month performance is minus 32%. Of course, the stock market is pulling back as a whole right now, so that's not too unusual, but fintech has been getting hit really hard. Let's look at their financials to see how SOFI is really holding up and what's going on with the stock. If we look at the revenues, in 2018, they had revenues of, you add 3 zeros to these numbers you're seeing here, but I'll just speak them like they are, 269,000. all the way to growth of 2021 of 984,000. They have a net income for common stockholders, which is a negative, unfortunately. It's gone from a negative of 252,000 in 2018. It's been diving a little bit each year, as you can see here, to a negative 524,000 in 2021. Their trailing 12-month numbers show a negative 524,000. So they're having a little bit of a tough time, and of course it's related to that moratorium on student loans. Looking at their balance sheet, let's look at their debt, which is a really big deal for a bank. You can see their total assets have grown quite a bit from 7.2 million, again you need to add 3 zeros to that number to get the actual number in 2019, to 9 million in 2021. Their long-term debt is quite a bit larger than their current debt, which is of a concern that they're having to borrow quite so much money to keep going. You can see in 2019 that they were at 4.9 million, 2020 4.5 million, and 2021 3.5 million, almost 3.7 million. So that's a lot of long-term debt for a company of this size, which is somewhat of a concern, as I mentioned. Considering their revenues, it would take them quite a while to pay off that long-term debt. Let's take a look at their cash flow because we want to find out what their cash flow looks like that they're raising from their own operations. So their operating cash flow has been, of course, a negative and growing in negative quite a bit, from a positive 1 million in 2018 to a negative 1.3 million in 2021. Their free cash flow, of course, is what they're raising from their own operations. And we already saw they're borrowing quite a bit of money. So they had a negative 92,000. They did have a positive cash flow in 2018, but have been going more negative each year until quite a large negative free cash flow in 1.4 million in 2021. So they're having a bit of a tough time now, and that's probably another reason why the stock has been pulling back quite a bit. In 2020, they differentiated themselves again by purchasing Galileo for $1.2 billion. But why? So let's look at that a little bit more and see how that can help them in the future. So many readers are trying to figure out why a company that has been in lending and wealth management would acquire a payment processor. Galileo powers several of SOFI's competitors in the US, including the likes of Chime, Robinhood, TransferWise, Vero, and Monzo. So the smart operators in this space, for those with deep pockets, are realizing that owning the infrastructure can be a lucrative diversification strategy, a smart deposits customer acquisition strategy for those with aspirations on becoming a bank, and a strategic moat that can be used to block competitors. So what does Galileo do? The simplest way is to think about a payment processor as an intermediary between payment schemes like Visa or MasterCard and a fintech's internal systems. So that gives you an idea of what Galileo does for SOFI and how it differentiates them. Let's look at some more details about SOFI as a stock. Again, I mentioned they have a $5 billion market cap. They have a price to book value of under 1, which is very positive. That's a key number for a bank. They have a debt to equity ratio of under 1 also. And insiders own only 1% of this stock, but institutions own 37%. One concern I do have is that they have a fairly large float of 618 million, which makes it harder to move this stock on good news. And they have a short float of almost 23%, which shows there are quite a few short sellers going after this stock. If we look at their performance for the year, is down 62%, year to date is minus 59%, and performance for the quarter is negative 43%, and for the month is minus 36%, pretty much like we looked at with MarketWatch. It's really interesting to compare how SOFI is holding up with their stock price versus PayPal, which is in a similar industry, but PayPal is very, very established. I do own quite a bit of that stock, and they have excellent free cash flow numbers. So in looking at their charts, it's interesting to see over the last year that they've had similar pullbacks. SOFI has had more extreme ups and downs, but they've ended up really similarly as far as percentage pullbacks. And looking at PayPal's stock chart, you can see that it was on a uptrend since 2016 all the way through 2020, that big pullback, and then really zoomed up through 2021, and now has just crashed through April of 2022. So it's a tough time right now for fintech stocks. I personally am looking for a good pullback point on SOFI because I'd love to be invested in this one. I think they have an excellent future, but probably have a way yet to go on this pullback. I'd love to hear your thoughts in the comments below on SOFI. Are you invested in this stock? Are you thinking about acquiring shares of SOFI? Or what fintech stocks are you excited about right now? Also, if you have any other stocks you'd like to share with me that I should take a look at, go here to see our latest video on some hot biotechs that have catalysts coming up shortly that could make potential big moves, as well as some OTC penny stocks you want to know about.